What's going on, everyone? My name is D. Anthony with Evolution Traders. I hope you all enjoyed your holiday weekend, long extended 3-day weekend. Now, I know some of you guys were trading this morning's price action, and to my surprise, I really didn't want to feel like I needed to take any trades this morning. Kind of wanted to enjoy the long weekend, but I know a couple of members in Evolution Traders ended up trading this morning's open. There was a beautiful 20 SMA play that pretty much ran for the course of the half day. So congratulations to all of you guys. With that being said, we're going to take a look at the daily chart on the Nasdaq to kind of get ready for the week ahead. Now, all in all, we are still in bullish context. Okay, so what does that mean? Right now, the Nasdaq 100 is trading over its 5, 10, 20, 50, and 200-day moving average, along with the rest of the moving averages on my chart. Now, all in all, the market is strong. It's very strong. It's not to say that we don't have a red day. It's not to say that the market doesn't go down, but all in all, you need to be more so looking for the bounce opportunities when we do pull back. Okay, that's just the nature of the beast. Now, you're always going to get those pullbacks. You're always going to have those red days, even in an uptrending market. But you also do have to kind of understand that, when you're taking those short positions, treat them as scalps, because the moment you think that you're smarter than the market and you're catching, the final high here, and that we're just gonna, you're gonna be in the very top tick and this is gonna go down 1,000 points, is the moment it goes down 10, 15 points and it immediately snaps and traps you out of the position. So what I'm gonna be looking forward to this week from the bull side of things is 19,023. That's gonna be last week's highs. I want to see that level get taken out. Now, from there, we've got room up into this upper Bollinger Band of 19,213. Ultimately, I'd like to see that next push higher before we do get a pullback. Our pullback spots are looking at the 5-day moving average of 18,815 and all the way down here to the 10-day moving average of 18,726. Anything below that, we could break and retest this linear regression demand zone here. Okay, so when we previously broke through the demand zone here on the 15th, we've kind of traded sideways a little bit, putting in a high, back testing the rising support here, and then now kind of trickling up towards the high side. So if we do get any drastic pullback, look for this as a firm level of support as our 20 SMA continues to rise. Again, for me, I'm not going to be, short biased, where I'm looking for more of the short opportunities until we close below the linear regression and start making our way down here towards the 20. Ultimately, anything over the 50-day moving average, which is sitting way down here at 18,200, I'm a little bit more on the long-sided bias. Now, that does not mean that I won't take a quick scalp to the short side, but I need to see some type of gap up. I need to see some type of insane move off the open where they kind of trap those early buyers, and then we get a quick pullback into rising support. I'm looking to get in, take a quick scalp, and just get the heck out, because I don't want to be involved in that. Now, I passed a couple of funded account evaluations, or evaluations, whatever you want to call them, one for Top Step, one for Apex, so I'm adding those to my arsenal. I'm going to look to trade these a little bit different. I'm going to treat these more as a slower, longer horizon type of safety net blanket. So I'm going to really be trading these with small size. I'm going to only be taking just a couple of particular setups each and every single day, trying to limit it to 2 to 3 trades a day. Okay. I'm thinking about a daily loss limit for myself of 500. And, that's generally speaking, between 2 and 3 trades losing with the amount of risk that I'm looking to put on the table. I'll probably do a little bit of a mini series covering these 2 funded accounts, kind of showing the highs and lows of how I particularly manage these funded accounts, and if we can get these things to pay out, or, I take a little bit of a tumble on those. Again, I've ran through funded accounts in the past, taken some payouts in the past, lost some evaluations in the past. But again, trading the prop firms is not my full-time gig. My full-time gig is trading options. That's where I make my bread and butter. And I look at trading prop and I look at trading futures as a secondary source of income. So for some of you guys out there, don't put a lot of stress on yourself, especially if you work a 9 to 5. Trading prop and trading futures is your secondary source of income. That's your side hustle. So again, it's not an end all be all. As much as everyone wants to quit their jobs and trade full time, Keep your 9 to 5 job as long as possible. Keep your part-time job as long as possible. Keep your side hustles as long as possible, and just look to add revenue to your bottom line, utilizing the prop firms to get those payouts. And typically for me, I try to shoot between 2 to 3% per account per month. Now, every month is not going to be a 2 to 3% month. Some months might be flat. Some months might have a 5-10% gain on the month, depending on market conditions. But if I can get those accounts to around 2 to 3% on that 50,000 with the drawdown, okay, remember, you're realistically trading that drawdown. So even though we're leveraged up to 50,000 on one particular account or 250,000 on another particular account, I'm still trying to keep things ballpark realistic. Okay, so if I can manage 2% a month off these accounts, I'm more than happy, and I'll just continue to cycle and take more evaluations and continue to add more of these accounts and eventually spread out my risk. I like to tell everyone, you know, it's not how much money we make per trade or per day or per week, but it's, you know, that's not what's ultimately going to make us more money. How we make more money is having more money. So, you know, instead of, you know, trying to take one account, you know, to $10,000 and $100,000 on the year, $10,000 on the month and $100,000 on the year, you know, instead look to have $1,000 month, a $10,000 year, but spread out times 10 accounts. That's going to ultimately keep your emotions in check. It's going to allow you to trade size that's much more manageable from the emotional and psychological standpoint. So again, so what I'm going to be looking for this week is those long setups. So the game plan going into tomorrow is if we do washout off the open, that means if we have a red open, a gap down, a wash, I'm looking for the trap, and I'm looking to try to find the bounce off of rising support, whether that be, you know, off a 5-minute linear regression, off of a 5-minute 200 or 50 SMA, or even a rising hourly support such as a 10 or 20-day moving average. Those would be the areas that I'm going to look to bounce the Nasdaq. If we open up excessively green, where we take out 19,023, more than likely I'll sit out and be patient for the first 30 minutes of the open to allow that opening range to kind of close. From there, if we do confirm long, I will take that long position. But if we do kind of, you know, put in that little bit of a blow off top, and there's an opportunity for a setup to maybe take a little bit of a scalp for 10-15 points to the downside into rising support, I will do that. That's my plan. Again, I hope you guys all had a fantastic weekend. Like, comment, and subscribe. I'll see all of you guys on the next video.